A significant rise in tensions between Russia and Ukraine has rattled global markets, including the commodity market. Oil is gaining value. Its growth can also be attributed to the US President Joe Biden's comments that Russia could invade Ukraine on February 16. This announcement caused oil prices to rise above $95 per barrel. Obviously, this is not the limit for the quotes. Military actions will inevitably lead to energy disruptions. The higher the probability of a war is, the more likely oil prices will keep rising. Despite other statements about the continued negotiation process and the absence of a real threat, the excitement around Russia-Ukraine relations will persist until the above date. This means that oil prices are highly likely to extend gains. In the meantime, Brent crude oil futures set a new price record. After the asset completed its correction around the level of $90 per barrel, buyers returned to the market. A sharp increase in the volume of long positions prompted speculators to open additional buy orders. As a result, the price soared to $96. Although oil is highly overbought, the market is still in an uptrend. Therefore, oil prices have every chance of approaching the psychological level of $100 per barrel. At the same time, steep price hikes may well trigger a technical correction. Growing geopolitical tensions had a negative impact on the Russian currency. After the US president announced an imminent attack by Russia on Ukraine, the ruble reversed. In a short period of time, the dollar gained value by more than 2 rubles. At the moment, the dollar-ruble pair is trying to stay firm around 77 rubles per dollar, but fundamental factors are not facilitating this process. The departure of diplomats and a number of Western countries urging their citizens to leave Ukraine immediately fuel tensions as well. Although Russia once again denied any plans to invade Ukraine, global news and information resources continue to create tensions that boil over. Against this background, it's obvious that market participants will try to minimize their risks. Thus, the Russian currency is likely to extend losses in the short term. From a technical point of view, the dollar versus the ruble pair shows high volatility. In a short time, the US dollar added more than 4%. This major price change indicates excessive speculation in the market. Accordingly, one should not rely entirely on technical analysis and signals. When speculators rule the market, it would be a wise decision to be guided by fundamental analysis or rather news reports. Amid growing geopolitical tensions and investors fleeing risky assets, gold is trading upwards, which comes as no surprise. The precious metal has always been perceived as a safe haven asset, and today's movement is another proof to this. Gold is still considered by market players to be one of the most stable investment tools. At the same time, its safe haven appeal bears the risk of a sharp change in value if fears are not true. Thus, if Joe Biden's words ring hollow, gold prices will most likely begin to decline on Wednesday. Meanwhile, gold futures have not only continued their uptrend, but also overcome the resistance level of $1,850 per ounce. This indicates that market sentiment is mainly bullish, and the metal has a chance of extending gains. The first strong buy signal will appear when the price consolidates above $1,920 per ounce on the daily chart. Notably, this is not the first attempt of gold to resume its rally. The previous ones ended with a decrease in the volume of long positions around the levels of $1,880 and $1,910, followed by a reversal. This time, the situation may repeat itself. Well, this was the forecast for the start of the trading week. Today's macroeconomic calendar, full of statements, may increase tensions and continue to rattle the markets. May your trading be calm and lucrative. See you back soon.